In this video, we're going to look at Toronto Dominion Bank, ticker symbol TD, the pros and cons to the stock, what it would be worth if you invested 10 years ago, the dividend history, also which financial institutions are buying and selling the stock, plus a look at the financials and forecasted price targets from analysts. My name is Alex, and this is my Dividend Income channel. Let's have a look at the brief history. The Toronto Dominion Bank, commonly known as TD Bank, has a long history that dates back to the founding of the Bank of Toronto in 1855. The Bank of Toronto merged with the Dominion Bank in 1955 to form Toronto Dominion Bank. In the United States, TD Bank operates as TD Bank, America's most convenient bank. The bank has undergone significant expansion in the US through acquisitions, including Commerce Bancorp in 2008. According to Standard & Poor's, it is ranked 6th largest by total assets and 5th largest by market cap in North America. TD Bank Group was the largest bank in Canada by total assets and also market capitalization, and is the 23rd largest bank in the world. What are the pros and cons to investing in the company? The pros: number 1, strong market position. TD Bank is one of the largest and most established banks in Canada, with significant presence in the United States as well. A solid market position and brand recognition can provide stability and potential for long-term growth. Number 2, diversified revenue streams. TD operates in multiple business segments, including retail banking, commercial banking, wealth management, and wholesale banking. This diversification can help mitigate risks and provide stability to the overall revenue streams. Number 3, consistent profitability. TD has a track record of delivering consistent profitability and has maintained a solid financial performance over the years. Number 4, dividend payments. It has a long history of dividend payments for shareholders, increasing it over time. The cons: number 1, exposure to the banking industry. Like any bank, TD is subject to various risks associated with the banking sector, including economic downturns, regulatory changes, and potential credit losses. Number 2, vulnerability to the economic conditions. As we've already seen, TD's performance is closely tied to the overall health of the economy. Both in Canada and the United States, economic downturns or financial crisis can negatively affect the bank's operations and financial results. Number 3, market competition. The banking industry is highly competitive, with numerous players vying for market share. TD faces competition from major banks as well as new entrants, including fintech companies, disrupting traditional banking models. Number 4, regulatory and legal risks. The banking sector is subject to extensive regulations and oversight, which can create compliance challenges and potential legal risks. Now let's have a look at how the stock has performed in the last few years. If you invested $10,000 in Toronto Dominion stock 10 years ago, what would it be worth today? 10 years ago, specifically on May 1st, 2013, you could have bought approximately 247 shares at a closing price of $40.42. Then May 19th, 2023, the value of your investment would have been approximately $15,047.24 based on the closing price of $60.92 per share. That is over 50% increase in value. This is assuming you have not reinvested the dividends. The current dividend pays 71 cents quarterly a share. From those 247 shares, you will be receiving $175.37 quarterly. That is $701.48 annually. If we had reinvested the dividends, we would approximately have 351 shares and an approximate value of $24,224.04. That is over 142% increase, which really shows the power of compound investing. Please note that this is an estimate based on historical data and does not take into account any taxes or transaction costs that may have been incurred. Toronto Dominion Bank has been paying out dividends since 1998. We can see a nice steady increase in dividends over the last 10 years. Plus we can see what the projected increases over the next 10 years could be based on previous historical data. Let's have a look at the financials. Toronto Dominion has a market cap of $111.5 billion. It has $1.26 trillion in assets. It has a payout ratio of 59.12%. A little higher than I like to see it, but more than manageable. Revenue has been increasing year on year by a minor blip in 2021. Similar with EBITDA, which stands for earnings before interest, taxes, depreciation and amortization. Free cash flow is generally steady. Net income is on the rise. Also EPS, which is great. Cash to debt is good, plus the dividend increase, which we went through earlier. Shares outstanding coming down ever so slightly, which is also good to see. Valuations okay. Expenses on the rise. G&E is their big one, which is general and administrative expenses. This could include building expenses, salaries, wages, insurance, licenses, etc. CapEx is their other main expense. It is okay if the expenses are increasing as long as we can see consistent earnings growth, as we can see a lot of growth in recent years, especially on US retail and Canadian banking. Now let's look at the financial institutions buying and selling the stock. Institutional investors hold a majority ownership of TD through 55.6% of their outstanding shares that they control. We can see what the top 10 institutional investors are doing. 8 of the top 10 have been buying. Interestingly, BMO Asset Management Inc. selling 11.35 million shares and BMO Asset Management Corp. buying 7.5 million shares. From the top 10, overall more has been bought than sold. Now what do the analysts think the 12-month forecast of the stock price could be? CNN Business have an average 12-month price target of $73, 19.8% upside from where we are today based on 3 analysts. TipRanks have an average price target of $94.63 Canadian, which is roughly $70 USD, and is 15.03 upside from where we are today based on 10. And Zacks have an average buy of $72.98, 19.78% upside from where we are today based on 9 analysts. We zoom out over the last 25 years, we can see the stock has performed very well, peaking in February last year. The stock price had a 52-week high of $77.15 and low of $55.43. The dividend yield is currently 4.68%. With the current state of the banking sector, the stock price could easily fall further, but overall the fundamentals are good and it is a stock I have added to my watch list. If it falls into the low 50s, I think this is where I would start a new position. Thanks for watching. As usual, if you've enjoyed the video, please like and subscribe.